Welcome back to episode 134 of the Block Runner Podcast. I'm your host, William, always here with your co-host, I-Man.
What's going on, dude?
Of course, we got on the sticks. We got TJ. Thank you for joining.
Hey, guys. How's it going?
All right. So we're going to dogpile onto this negative sentiment for today.
Yeah, the holidays are over. Well, not really. Thanksgiving's over, so time to get gloom again.
Yeah. So if you watched our last podcast, we were together for about an hour and a half, and we were just talking about pretty much
whatever the fuck.
Anything.
We were trying to have fun.
Yeah.
Trying to distract from the doom and gloom for a little bit.
Yeah, for a little bit. Yeah,
we had our self-promise, right? We were going to come back to we're not going to pile on any more negativity.
Yeah.
We're about to pile on some negativity.
Yeah, yeah, and like talk about some worst-case scenarios. There have a non-zero chance of happening.
Yeah, I guess we always speculate on these types of things, right?
Yeah.
Because it's like, is the thing that FTX did the worst that could potentially happen in these markets? Some people say yes, but others say, hell no, not a shot. There's like way worse shit looming out there.
There definitely is.
Yeah, so we've been speculating on that, right, for a little while now. Actually, we always speculate on these types of things, but not really this deep. I guess now we have a catalyst to go even deeper and like really investigate a little further.
Yeah.
What could potentially happen to really wreck the fuck out of this whole thing? You know what I mean? Because it has implications across the board, right? I mean, we're actively building a project in the Web3 space.
Yeah.
We know tons of other people doing that. I mean, that is the nature of this podcast, right? Is deep diving. We've been doing that for years now.
For sure. Yeah.
Investigating like the innovations and all that stuff. So
yeah, and it comes from I guess a unique perspective because we are actively building.
Yes.
We get to kind of see hands-on like what it's like to build a crypto project. And
yeah. There's a lot that goes into it, you know.
There's a lot of stuff in the background, like in design schemes, like we can't be a security, we can't be this, and
you know what's
you can't violate that law, and
it's interesting, not to like toot our own horns or anything, just because we actually think of these things while we're designing and constructing our projects.
Yeah, outside of like any pressures, we just don't want to sell securities because of all this mess.
Yeah, we kind of have like, I don't know, like a spidey sense. Is like, dude, at some point there's going to be like a lot more scrutiny in this space because we know it's definitely like a wild, wild west type environment. It's always been that way.
Yeah.
Little slaps here and there from the SEC and stuff, but nothing too crushing unless you commit some serious act of obvious malicious fraud. Yeah. Then you're going down.
Yeah.
We've seen that.
Yeah.
So that's definitely not us. And anytime.
But you know what? Projects have gone down on their own like merit, right? Like for example, FTX, SEC didn't take down FTX. No. It was CZ in his tweet.
They just got caught, basically.
They got caught.
They're highly likely if CZ didn't do what he did, they would have continued on and probably outlived this bear cycle and resurged during the bull as like, you know, literally giving a Coinbase a run for their money.
Yeah.
Potentially, maybe even putting them out of business. Potentially.
Yeah.
But yeah.
Yeah, because they were committing so much fraud that they were like just buying up stadiums and buying up failing projects like BlockFi and Celsius.
There's no Coinbase stadium out there, is there?
No, there isn't.
So they were kind of like winning on the marketing front.
Yeah.
Getting their name and brand in the public zeitgeist, you know?
They were.
So extrapolate that 5-10 years down the line. There's a possibility, you know, they could have got away with tremendous fraud, which kind of like makes you scratch your head a little bit and think, you know, who else is out there? What other ginormous corporate entity is committing frauds on this level or greater than? It's got to be like a pretty decent chunk.
Yeah. And for those of you listening and watching, well, we've discovered a couple of potential nuggets that could be bigger than FTX.
Well, I don't know if discovery isn't the right word. We've identified. Yeah. Right?
Yeah.
So potential candidates.
There you go.
Because discovery implies we found like smoking guns.
Yeah. That's true.
We're not out there like BitBoy.
Yeah.
Camping like headquarters in their bushes and stuff like that, trying to find like, you know, shots.
Yeah.
Incriminating shots. But nonetheless, dude. So what do you think? What could be what are these things you're talking about?
Well, there's a lot. I mean, so while you guys were sick for the last 2 weeks, the entire crypto collapse occurred while you guys were sick.
Literally like AFK.
Yeah.
You're like, dude, is everything all right over there? It's like I'm telling you, is everything okay with you? This is like you're over there actually like watching the collapse happen in real time. Yeah. You know?
Yeah. And on top of the collapse, I mean, even before the whole FTX thing, we had a court ruling on the LBRY Token.
Yeah.
That apparently makes the LBRY Token a security.
Yeah.
And it's so much a security that even its utility functions don't count as a utility token.
Well, that's the takeaway from this.
Yeah.
Because they tried to use that as a defense.
Yeah, they did, and they lost.
Well, not just them. That's from my understanding. That's like the prevalent ethos.
Yeah, if you just create a utility token,
therefore you're not liable to any sort of scrutiny.
That's wrong. Apparently, according to the jury, the courts, and the SEC.
That's huge.
Yeah,
I don't know why this isn't like headline. Maybe it was for, like you said.
I think
for
it was
a minute, and then the FTX thing happened.
That's right.
Totally overshadowed this. It almost feels like what's the word? Like a coordinated, like like whenever like the United States passed like all these like secure privacy laws.
Yeah, it's I don't want to say false flag.
That's what I wanted to say too.
That's not it. It's
some sort of cover up event, right? Like they have an intention to like pass some sort of obvious.
Yeah, but I don't think the government would want to cover this up. They would want to like propagate. They want to push it up. It's like, look what we did.
Yeah. There's no way FTX was like a cover up. I'm just saying it feels like that.
It was
because there's been precedents, right, where the United States usually pushes like these weird things, or they like I
was like, look at this new shiny thing.
Some other events happening, they'll just bomb the fuck out of some island somewhere, just completely eradicate like a whole village. Yeah. It's like nobody saw that, right? Because everyone else was paying attention to this other thing.
I was like, Ben Affleck gets a divorce or some shit.
Or like whenever Will Smith slapped Chris Rock, all of a sudden everyone forgot about Russia and Ukraine.
It's like Chris, you're gonna get slapped.
Exactly.
Like, you need to get slapped because we're gonna bomb the shit out of an island.
Yeah, we're gonna funnel billions of dollars to Ukraine to like have some proxy war. We need people not to pay attention to this. Can you please slap this motherfucker?
Yeah.
It's like we'll do government.
Yeah.
It's like some Illuminati type shit.
Yeah.
Right?
At least it feels that way. I mean,
it does.
It would seem unlikely for it to be that way, actually, just because there's so many
Occam's razor, right?
Yeah.
It's like the most
easy to explain is likely the most the truest
probable thing.
Yeah, there you go.
Yeah, so I don't think that's what's happening here. It was just a coincidence, but still, it doesn't overwrite the fact that to me this is a huge potential thing that everybody's gonna kind of like look back at is like, dude, this was a huge precedent set.
It is because according to this ruling, pretty much everything except Bitcoin is now a security. I mean,
okay.
I mean, if you use the guidelines of this precedence,
that hasn't been like publicly.
It has. It absolutely has been said
by the SEC,
by LBRY.
Okay, like in a
wide sweeping implications because we lost. This implies Ethereum and everything else is a security.
So LBRY said that.
Yes.
It's like, wake up, guys! We're getting fucked over here.
Yeah.
Basically. Shit, dude. Well, that it's true. Yeah. Because like I said, the ethos I've always understood is like, I don't know where this came from. Who propagated this idea? As long as you spin up a token that has some sort of utility within the ecosystem, like, dude, you're fine. You know? Even if people are over here, passively staking it or locking it up, doing whatever you want with it, and not having to contribute any other like whether laborious contribution or financial additions on top of that, like you will generate some sort of yield from it.
Yeah.
So you're fine as long as you're supporting the network. This is not a utility. I mean, this is not a security.
It's not a security. Yeah. However,
it's not the case.
Not the case anymore, according to this. So I want to read a section here. It says that some purchasers may have, so key takeaways, that some purchasers may have consumptive intent in buying tokens does not mean a token is not security, particularly where issuers' own words suggest investors should consider buying such tokens specifically because of the potential for a return on their investment.
Yeah, see.
So as a result, issuers should therefore carefully consider how they describe their network and the tokens that support them.
Okay.
So this is implying that LBRY had said at some sort of publication, article, whatever.
Through their marketing materials, because they had like a public sale, right?
Right, they did. It was an ICO, yeah. And so if you're selling a token and you are part of that sale, you're describing the token as like an investment utility, investment tool, obviously right there is a security. And so no matter how much utility you add to your security token, it doesn't matter.
Yeah. I wonder how direct you have to be in the in those wordings as far as what is it that either implies that it's an investment vehicle or not.
Yeah.
Right? Are they directly just saying, hey, because there has been examples of that. I think even Ripple itself, which is another huge impending case, right? I think I don't think they had an ICO because it was spun up before. I think even ICOs were a thing.
Yeah.
But at some point during their lifespan, they did some sort of marketing initiatives, and they were out there basically publicly stating, buying Ripple is a good financial, decision, investment. There's a good future outlook for the potential for it to increase in value.
Yeah.
That has been recorded and logged, and I'm pretty sure presented during this court case. And even though for whatever reason everybody thinks Ripple's got like a home run case,
for some reason,
I don't. Based on this, they're fucked.
Well, not only
based
that,
on this outcome,
not only based on this, but their own like court documents for Ripple case, like it's clearly a security. But some people obviously just they have an opposite opinion that we do about it.
Yeah, I guess it could potentially be like a media thing where there's an obvious bias,
It could be.
I don't know. But the point is, we don't know either. We're not the ones deciding these cases. It's just...
Yeah. And it's likely going to be settled, which doesn't provide any clarity on the situation at all. Yeah,
to people like us, founders, right? People who want to design token systems, ecosystems, whatever. Decentralized. Everybody recognizes if you're trying to build anything in the Web3 space that has even a shot at being decentralized in the future, token incentives are a massive component to that.
Yeah, that's right.
You need these things in order to galvanize, interest from a community who are willing to support the network and ecosystem, right? That's what LBRY said when they launched their token. Mm-hmm. It's like they have a service here, a decentralized like file storage service, I guess, to where you can create things like a YouTube-like product or anything else that isn't, operated by a centralized body. So these tokens play essential roles in that. So, I mean, but that's not what the SEC is saying they have a problem with, right? It's whenever you market these things, just please don't, I don't know how I could do it. Just don't, because I just said it, like incentive. Like, what is the incentive to participate, right? It's some sort of value gain.
Yeah, but right? But the incentive to participate in the context of what we're doing is the activity that you're performing in order to generate some value for yourself.
But what value? In the form of a token, right?
In the form of a token.
Yeah. So
it's different than give me your money and I'll give you a token.
But that's the thing. If it was a set value, like as if like you perform a task, you're going to receive, I don't know, $10. And it's that $10 you earned, it's always going to be $10.
Or it could be 10 tokens. That 10 tokens could be $1,000 or 50 cents.
Yeah. That's where I think it gets squirrely from the SEC's perspective, I guess.
Really?
I think so.
A variable value? I don't
potentially. Because
I guess you are giving them value. That's
you're giving them the perception of like a future gain, I guess. Like even if you're participating, it's like fuck. There's potential here.
But you're doing work as a
return. Maybe it's not the participants the SEC is worried about. It's the investors,
the purchasing,
the people who buy these tokens only to speculate.
Yeah, because if people want to, let's say, waste their time on doing something stupid or ridiculous or something valuable, and they get a token for it, I mean, that should be up to the person.
Yeah, that's fine. Like that obviously passes the Howey or fails the Howey test, right?
But if somebody says, "I'll give you $10, you give me tokens," then that
you don't have to do shit beyond that point, right?
Correct. That's a problem. Because you're giving the $10 because you're expecting a return.
Because because if you're trying to market an ecosystem, it's like, okay, you're not trying. I mean, obviously, your demographic marketing wise is the investor community, right? Because you need them to create a market value for your own token, right? Yeah. It's not just the participants. You have to have outside stakers come in and be a part. That is another way of participation.
Yeah.
So you kind of have to like mix these different like narratives in this marketing approach. Like, you want participants, right? You could target participants without sounding like that. Yeah,
but this implies that you are needing capital to start a business. And so you are selling tokens for that capital so that you can hire people to create the product that you're trying to create.
Mm-hmm.
But there's a different side of use case for a cryptocurrency is you create an ecosystem of work, do the work, and you get compensated in this token.
Yeah.
I feel like that's materially different than give me money and I'll give you a token.
It is. Absolutely.
Right?
What I'm saying, though, is you're addressing both of those actors of an ecosystem, the people you want to contribute work and time value, human value, and in return, you're compensating them with ecosystem value.
Yeah,
right?
but the distinction that I'm trying to make is that with this sweeping loss to the SEC, which implies that every token is a security, I just laid out a scenario where this token is not a security.
Which one?
The one where you create an ecosystem of work and then you compensate the actual worker for that effort.
Well, that's kind of like LBRY had the same thing going for it, didn't it? Like you're contributing to the ecosystem by uploading content.
But they sold tokens.
I know.
That's the difference.
But that's not what they're saying. They're not mad. I think that's probably like the umbrella solution to this. If we all just stopped taking people's money for issuing tokens, the SEC would have a much more laxed position on everything, right? Because that's like step one to the whole Howey process, right?
Yeah,
but that's not that's not the takeaway from this. They're not mad that they sold stuff. They're mad that they convinced people that the stuff that they sold was going to eventually become more valuable.
Yeah, that's right.
Because that's another part of the Howey process, right?
You're assuming, I'm going to get a return on this
a common
investment.
Enterprise or whatever the fuck.
Yeah.
So LBRY. So I mean, obviously, there's tons of gray areas, even in Howey's definition.
Yeah.
Clearly, Howey shit is we need a new Howey.
Yeah.
Let's call it fucking, I don't know, whatever the name of Ripple.
Yeah, what's his name? Yeah.
I don't know. We need a new benchmark case for the Web3 space because there's more variables to it.
See, but that's the thing is there won't be a benchmark case until somebody defeats the Howey test and comes up with a better test. Yeah,
it's like, okay, we have these Howey-esque derivatives, or no, these Howey-esque principles.
Yeah.
But there's these other derivative contributing factors that need to be accounted for in order for sustainability to be achieved.
And therefore, this is not a security.
Something like that.
Yeah, exactly.
Yeah, but good luck making that case because apparently, the SEC only has 2 dudes or something like that.
Yeah. Yeah, I have an article here
which shocked the hell out of me. It's how understaffed. I'm not advocating for more SEC personnel. I was shocked that this is how understaffed they are. Yeah.
I saw this earlier. SEC nearly doubles size of enforcements of crypto assets in cyber unit.
Yeah, when you said that, I was envisioning hundreds or thousands of people were added on.
Yeah.
Right?
Yeah.
And you're like, nah, dude, it was 10 guys.
Yeah. The newly renamed crypto assets in cyber unit in the Division of Enforcement will grow to 50 dedicated positions.
Wow.
Grow to 50, right? Yeah. It's 20 new positions from their original 30.
So this makes sense why things move so slow.
Yeah.
Especially in crypto regulation, everyone's been
yeah. And then the marketing teams of all these crypto companies, they spin up these new terms
oh my God,
everything.
Not just new terms, just new
functions,
new use cases for crypto and Web3, whole new things. Every quarter there's a new thing.
Yeah.
How the fuck are we expecting some unit this small to keep up? They cannot. So
yeah, we were contemplating. It's what is the SEC strategy here? Is to potentially just go after the ones that are clearly violating, the biggest ones that are clearly violating, so that it spreads fear to investors, to people or projects contributing to the ecosystem to not either sell tokens. Investors won't invest in ambiguous projects.
Yeah, that could potentially ping these.
And with this one case, all of a sudden the crypto industry changes.
Yeah,
just because there's no investors or people or projects are not designing tokens in the same way.
That's their only potential strategy because with the personnel at this size, you can't regulate.
Every single company.
Yeah, I mean the crypto industry. It's so rapid and it's vast. It's becoming more and more accessible.
Yeah,
as smart contracts become templified and the minting methods, the emission methods, and all the different like rules and parameters of building decentralized ecosystems become almost ubiquitous, as like at some point the internet is like a ubiquitous process. Like anybody could spin up a website.
Yeah, that's true.
But at some point, Web3 and blockchain and the metaverse, all this stuff will become that ubiquitous, right? So it's like, good luck, 50 lads.
Yeah.
Trying to regulate all that.
Yeah.
So the strategy makes sense. Like, let's go after these landmark cases, I guess. I mean, LBRY is like not even that big.
It's not that big. I don't know why they went after LBRY.
I don't either. They must have like said something really egregious. Like
probably.
It's like buy now.
Yeah.
It's like hot fire sale.
Invest in LBRY.
Yeah, it had to be that like obvious.
Yeah. I think so. Otherwise.
Yeah. Why go after them?
Yeah, because they're not the biggest. So yeah.
I mean, yeah, exactly. That's why that kind of got swept under the rug.
But potentially. But also, I think for the SEC to go after LBRY, they knew they had a slam dunk case. And even the utility argument failed.
Big time.
Yeah, that's
a
big deal.
They took the Ethereum. I mean, dude, the Ethereum Foundation, there's been some public scrutiny from the SEC, right? About the whole staking mechanics. Now, due to ETH 2.0, the eyeballs are on them.
Yeah.
Right? Now
they're more centralized, and that centralization happens to reside in the United States.
There's that.
Because of Coinbase having so many Ethereum being part of the network.
But if you look at the definitions of the utility of the LBRY token and the utility of the Ethereum token, they're very similar, right? It's the unit of measurement of activity within the ecosystem, right? If you're to do anything like set up an account for LBRY or set up a channel, you got to spend the what is it, the LBC token? LBC token to do that. It's basically a gas. It's a transactional record gatekeeper. Like without the token, no processing.
Yeah.
Sounds very similar to the Ethereum token. Without ETH, you can't do shit on the Ethereum network.
Yeah,
that is the utility of the token.
LBC was used to publish content, create channels, tip content creators, and boost content. Users obtained LBC by mining, earning rewards for certain activities on the LBRY network, or purchasing the token on the secondary market.
Yeah, so this is why this is so potentially damaging. That's literally every token on the planet.
It is.
Well, mining or validating, staking.
Yeah.
Right? That's how you obtain most tokens.
It's every token on the planet except Bitcoin and a few others like Monero.
I wonder if the act of gaming is different than mining or staking, because that's a very that's a task and a half.
It is
to game to earn tokens.
It's an effort. It's work.
It's a ton of work.
Yeah.
So we haven't seen any real scrutiny yet.
Yeah, I don't know
for play to earn.
I don't think that qualifies because you're trading time for money. Yeah. That's what the entire basis of society is.
Yeah.
You give me time, I pay you for your time, and that's it.
Agreed. We're not all securities, are we?
Yeah, right?
They're going to regulate humanity?
Yeah, right.
I mean, if it gets down to that, that's what it sounds like. Right? So I'm not too worried about the play to earn stuff, but nonetheless.
Yeah, but that's interesting how maybe that's going to be the gamification of crypto is how a lot of projects get around regulation.
I think so.
Maybe.
It should be. We've advocated for this as far as a metaverse use case,
for sure.
A lot more metaverse activity contribution, I guess, is some sort of from an ecosystem perspective.
No, from all projects. All of a sudden, all projects are in the metaverse because there's some sort of effort that's needed in order to earn the token or whatever.
That's true.
Yeah.
And we have our own thoughts and opinions on that, but I don't think we can go into it yet. On the fuck, man. So, yeah.
Well, I mean, it's just goes along with if let's assume the metaverse is going to be $1 trillion industry. It's going to be comparable to today's crypto, and all crypto projects need to exist somehow on the metaverse layer, kind of like all companies and projects need to exist on the social media layer.
Yes.
Right. If your company's not on social media, you largely don't exist.
So do you think of man?
So there's definitely a lot to think about from that perspective. But nonetheless, I mean, so we have LBRY.
Yeah, now we're just trying to think of potential workarounds. how to leverage the metaverse for that. Because I mean,
because
the definitions of work are, I guess, so broad.
It is broad. But we're speculating on how the crypto industry is going to pivot, assuming this has a wide-reaching.
So this is it. This is something like if it hits the fan and it goes nuclear, everything we're speculating on becomes true.
Yeah,
and like this does become a landmark case that for some reason everybody is just kind of overlooking at the moment.
This becomes a new Howey Test in how to generate tokens.
Yeah, like this is going to be bigger, way bigger than what happened with FTX and SBF and all that stuff.
That's right.
I mean, if you're talking about a systemic, like a systemic event that affects everything, has rippling effects like FTX did.
Yeah.
This is literally like the whole system.
This would be it. Yeah.
There is no Web3 without this.
I mean, technically, we're already there. It's just it's not permeating across like the zeitgeist of the crypto industry yet.
Yeah, I know.
Because if LBRY lost, even though that they have a utility token, that means every single other token is a security.
I know.
And what that means is now exchanges like Coinbase and, well, maybe not Binance, but Coinbase has to only list tokens that have been registered with the SEC. And
gone through whatever process, I guess, to...
It's going to be Bitcoin and nothing else.
Basically become like a public entity.
Yeah.
Whatever that means, whatever definition of that looks like. So we're talking multi-year process to figure out most likely.
Yeah, and filing for the SEC, it takes a ton of money and a ton of time.
Yeah, which
something that projects don't have.
That are just like spinning up tokens on Uniswap.
Yeah.
Yeah, exactly. It's going to weed out basically much of the things that make Web3 so, awesome.
Yeah. And that means every project that's not following these regulatory guidelines, they're going to be anonymous founders, and there's still going to be speculation run amok.
Yeah, let's consider this too. This doesn't necessarily mean if this happens, SHTF scenario, like it's the end of crypto Web3, right? That just means it becomes trickier for whatever entity the SEC has their hands on, or whatever countries.
Yeah.
There's definitely a list out there. If you're citizens of those countries, you're going to have a much more difficult time to participate in the Web3, the true Web3.
Yeah.
That isn't gatekept by the SEC, right? But it doesn't mean it's not going to exist. There's still going to be corners of the world. It's like kind of the beauty of Web3, right? Anybody can participate and build protocols of value, right? That has far-reaching access to not just United States regulated parts of the planet. That's the whole point. Web3 is intended and designed for those specific people, in my opinion.
Yeah.
The unbanked, the overlooked, the parts of the world that the government has no interest in regulating. Yeah. Like their citizens' activities, right?
But I feel like, although I agree, I think even though, let's say crypto, like your stance in crypto is it has more implications of value for the disenfranchised.
Yeah.
I feel like there's still a ton of money to be made from the United States perspective, where they need to figure out a way to participate or enable projects to exist within the United States, crypto projects specifically.
I don't think today that's true, but from a technology standpoint, it would be very imprudent, right, for them to just exclude themselves from this race.
Yeah, I'm trying to think of like an analogy. It's like if the Manhattan Project happened outside of the United States, and they were like, oh, nuclear weapons is too dangerous for the planet, we're not going to participate. That said the United States. All of a sudden, all the other countries come up with nuclear bombs. United States, they're left out. And then all of a sudden, they're the losers.
But the United States has a clear value gain from a technology like that, right? That's to remain in their position of power.
Yeah, but isn't crypto that a nuclear bomb?
I don't think so. Not at some point, it probably to the United States it will be. It'll feel like that, in my opinion. It'll feel like a nuke went off
Hence, they need to develop the technology, right?
I don't know. My point is, I don't know. I think right now the United States, the government, they think of crypto and Web3 as like, how much revenue can we actually intake from what's happening here? And a lot of what's being built and a lot of what attracts people to Web3 is
like degen stuff?
Well, it's stuff that the United States citizens mostly aren't participating in unless it's just like retail speculation on Dogecoin. That's about it. When you're talking about who's participating in these actual Web3 economies, they're not Americans. But they're not Westerners.
For now, though.
Well, that's my point. That's why it's like, dude, this isn't even like generating any like real substantial like tax revenue for us. Like if we're building like ginormous ecosystems where half of the U.S. population all of a sudden becomes part of the Web3 like labor market.
Yeah.
Fuck yeah, dude. I want that. That's a lot of tax revenue.
But that's like saying, you know, in the early days of the internet, oh, we shouldn't pay attention to the internet because it's not bringing in enough revenue for us to consider doing anything with it.
Well, I mean, I don't think there was as much regulatory concern for the early days of the internet.
There wasn't, but we're talking about technologies here. So
yeah,
I feel like the internet was a technology that that changed everything. I feel like crypto is the same thing.
It is, absolutely. But it changes everything for the worse for America, in my opinion. It destabilizes a lot of what they have, you know, as
but that destabilization power that crypto has, isn't that something that the United States needs to, you know,
like
keep their hands on?
Hedge against?
Yeah.
I would advocate for that if I was part of the United States, like
that's
council,
what I'm saying. I feel like
council of crypto people.
I feel like they're thinking about this. I mean, there's congressmen who are advocating for crypto.
Of course. But after events like this, it's very easy to like co-opt the narrative and convince other politicians like this is something that needs to be almost shut down. Right? That's actually like there's a White House. That's like the verbiage coming from the White House right now. It's like, dude, this is what happened to FTX is a perfect example of like why crypto is this potential thing that could hurt a lot of our citizens, right? Like that's what they think after they don't understand either they don't understand Web3 or they just don't agree with it. So much to the point where they don't identify the fact that what happened to FTX is exactly like a proof of concept of why Web3 needs to exist in the first place.
Yeah. We
shouldn't have to trust these centralized authorities for all of our financial, you know, well-doings.
Yeah.
But they don't get that to the, like, they see this as like, dude, FTX is a representation of the bad. All
of crypto.
All of crypto.
Yeah.
So that just shows they have no fucking idea what's going on.
Yeah.
No, or they just don't care or they're against it in general. You know?
Yeah, I'm seeing the article that you shared. White House says prudent regulation of cryptocurrencies is needed, hinting at the situation with FTX. So you're right. They're looking at FTX as implying that FTX is representative of everything that happens in crypto, just like rampant fraud.
From their perspective, it probably is because like this is the stuff that is taxable, right? This is what I mean. This is what they're looking at. They're seeing Coinbase and FTX and Gemini. Yeah. They're seeing the billions of dollars of volume they're doing on like a quarterly basis. And like, dude, okay, money.
Yeah.
This is actually an industry that we could siphon some revenues from. So therefore, you know, let's pay attention to it.
Yeah. They're
not looking at all the other shit that's going on in the Web3 space because again, that's not that's not Western, I don't know what, like user base, I guess. It's none of their concern. It's nothing they could really siphon from.
Yeah. Yeah, I mean, how does a country siphon tax revenue from a completely decentralized swapping network? Yeah.
Or sushi or something like that? Like, what are they going to do?
Yeah, they can't.
They cannot.
But you swap on Uniswap and then you off ramp it through Coinbase.
Oh yeah.
Therefore, that's tax.
That's their juice.
Yeah.
You know what I mean? So, but then they see what happened to FTX. Like, fuck, dude, we just lost like a huge portion of our juice.
Yeah, they're probably like not only that. The biggest thing about FTX is SBF being the poster child of Congress, crypto in Congress.
Yeah.
So that I mean, it soiled the reputation of crypto outright.
Yeah. So there's that. It's messy across the board. We already knew this all along. United States position, SEC. I mean, again, I think these things are obviously coming. So this is one thing to look out for, I guess, right? That could potentially have a bigger rippling effect across the whole system of the Web3 space. I mean, it could slow things down even more. We know on the institutional side, right? We keep saying over and over again, institutional money's coming, institutional money's coming. Well, if the SEC makes this position, it's not coming anytime soon, right? So all these predictions, the moon math charts we like to show, this could potentially fuck all that up, right?
Yeah.
If all of a sudden institutional grade money has to wait on the sidelines until these securities impositions are met.
Yeah. So there's angles to it though, because when regulation comes, as we're seeing it coming,
Yeah.
I think it's going to start with Bitcoin first. I think it's going to be clear that Bitcoin is a commodity and it's investable from an institutional level.
Okay.
And once that happens,
That's
the
true.
billions of dollars of volume that happens in like the regulated space
Yeah.
now can be funneled into something like Bitcoin,
a good point.
ETFs,
Yeah.
futures, everything that's regulated today.
That's a
Bitcoin.
good point. Yeah, it really does all.
It starts there, and then it trickles down to everything else, which is far more complicated because Bitcoin is the simplest cryptocurrency out there.
Yeah, as long as Bitcoin has the reins of freedom to kind of like continue to operate as it does, and we don't have to wait around for whole new like frameworks, governmental frameworks to be established in order for institutional grade involvement.
Yeah,
you're right. That could prop up the whole market. Again, the the SEC and other bodies will have to spend years to figure out how to, crack down on these utility being a negative, any kind of like marketing speech.
Yeah.
Things like this.
Yeah, I feel like there's got to be some guideline.
But that's been happening. You know? Like that sounds like business as usual.
All the other thousands of cryptos, they've all like sold a token to a certain extent.
Yeah. And the SEC has had like a trickling presence throughout these whole times. The last 5 years, they just pop their heads up, make their presence known. It's like, don't do that.
Yeah.
Like you said, because out of that strategy of fear.
Yeah.
Right. And then I think their wrist slapping is starting to get a little more intense.
Yeah, they are. But the wrist slapping is like from the perspective of the United States, though, because we talked about EOS, they got their little slap on the wrist.
It was like 24 million slap on the wrist after a $4 billion ICO.
Yeah.
I was like, unbelievable. Like,
I remember when the ICO was happening, I was like, man, I guess I could buy some EOS tokens because the ICO happened over an entire year, and you could buy unlocked tokens, per day.
So EOS should be like a case study for like how to market your project, because apparently they didn't use any of the wrong keywords.
Yeah.
They spent a year selling their tokens.
Yes. And
they said nothing within that year to trigger the SEC's like, hey man, you guys clearly were selling something that
Well, okay, I guess the violation that EOS did was they sold tokens to Americans. They didn't have any KYC or anything like that. I think that was a violation.
Yeah.
That's why their slap was so small in comparison to like BlockFi lending.
Yeah.
They got $100 million hit from the SEC.
For what?
For doing lending.
Oh.
Yeah, so I don't know if I have it here. I'll look it up real quick.
Yeah, BlockFi today just filed their bankruptcy, I guess. So another one of these systemic trickle events.
Here it is. So this was, when's the date here? February 2022. It says BlockFi agrees to pay $100 million in penalties and pursue registration of its crypto lending product.
Whew.
And so, like you said, what is it? How many months is that? 8 months later?
Yeah.
9 months later, they file for bankruptcy after paying $100 million in penalties.
Yeah. That's a big chunk, dude.
Obviously they're connected, right? You don't just pay $100 million and then 9 months later you go bankrupt as a complete coincidence.
No, but this is something kind of like you would expect this kind of outcome, I guess, from somebody who the SEC thinks violated something of significance. You would expect this kind of outcome, a penalty, a fee so severe.
Yeah,
and again, like sends fear out to other, entities in the space. It's like, don't do this or else suffer the same fate.
Yeah.
Consequence, right? You're basically being marked as a bad actor by the United States, and you're gonna get hit, to the point where you're Dunskies. You know what I mean?
Yeah.
And it definitely came at a horrible time. February. Ever since then, the market's been doing nothing but crash. So
yeah.
That means lending is going down. So they just bad timing.
Yeah.
That factors in too.
Yeah, making less revenue as a result of this.
Yeah.
Crypto's crashing. Yeah. It's just
it's a nightmare.
Yeah. So
what's the other big thing? So that's one.
So we have Ripple.
You said we had two, right? Or
yeah, we had two. Yeah, Ripple.
I feel like we have more than this.
I think there is more, but the main ones is like Ripple, I believe there's going to be 2 dates to be looking forward to. So today's the 28th of November.
Yeah, so this will probably go out after November 30th, right?
After November 30th. So we'll
you guys
see.
Hearing this, watching this,
comment down below. Let us know.
If you caught the news.
Yeah, if there's any news, right? Because it says November 30th and December 5th could be dates that reveal a possible settlement agreement between the 2 disputants. So that's the Ripple Labs and the Securities and Exchange Commission.
So this kind of falls in line, though, with like point number 1 of just more regulatory nightmare type scenario. Right?
Yeah.
Another landmark case like the LBRY one.
Yeah.
You know, because everybody was saying if Ripple loses this, it's kind of everybody else has some sort of implication involved. Like, you know, it's coming.
Yeah.
But the other one is the Tether one, right?
So the other one is Tether's.
Which is, I mean, everybody knows Tether by now.
Yeah.
It's been under the scared radar for a while.
For years.
Ever since I've been around.
Yeah. Yeah, you never touched Tether because of the FUD.
The FUD.
Yeah.
Some strong FUD.
Yeah, legitimate FUD, right?
Yeah.
This isn't fake FUD. So 82% of Tether reserves held in extremely liquid assets according to attestation. So a total assets of $68 billion at the end of the third quarter, exceeding its total liabilities of $67 billion. So they're more than collateralized, I guess. But 82% of Tether reserves held in extremely liquid assets.
Well, who's saying that?
So I think this is a disclosure from Tether.
Okay.
So that's the other thing.
Red flag number 1.
Right.
Yeah.
So Tether's exposure to commercial paper, so held in cash equivalents, and other short-term deposits, the company disclosed. So
Okay.
this is basically potentially like SBF saying everything's fine.
Of course.
Yeah.
That's exactly why you shouldn't trust.
Yes.
Do not trust anything these people say. Right?
Yeah.
Unfortunately, that's
See,
kind
and
of like the
that's-
sentiment in the ethos now.
That's why Coinbase is a comfy little cloud, because you can't trust them. They have audited disclosures, public disclosures of what they're holding and everything that they're doing on a quarterly basis.
Oh, so the comfy cloud for you is the fact that they're a public company and they have some sort of...
So this is like, it's like saying, regulation is coming down on crypto, bad. But then it's like Coinbase, completely regulated, good.
Self-regulated, basically, right?
Well, Coinbase is not self-regulated.
Well, meaning like they impose those regulations on themselves by going the public route.
By going the public route, yeah.
That's
a good point, yeah.
As opposed to the rest of the space is going to be forced, these public...
Yeah.
I guess processes to establish trust. But nonetheless, even with all this, there's still been precedent examples of publicly traded companies that have acted fraudulent and completely fucked over tons of people. But obviously, there's way more of that in the non-public space.
Yeah, the unregulated space.
Way more.
Yeah.
So it does add a layer of cloudiness. Comfy clouds.
Comfy clouds.
They're just literally like little, what are those clouds? Like stratas?
Cumulus?
No, cumulus is the good ones. Those are the big puffy ones.
Right, those are the ones you're talking about, right?
Well, and the crypto, there's the stratus, so like all thin.
All thin, yeah.
Almost transparent. You step a foot on them, you could drop at any time.
Right.
That's what crypto cloud life looks like.
Yeah.
But we want the cumulonimbuses, right? That's what we're seeking out here in the public world.
Right. So they disclosed this, and so I remember reading somewhere that in like February or something, there's going to actually be an audited financials for Tether,
which we've been waiting for years.
Yeah, there's another article. I think I might have it. Yeah. Oh, there's this one too. Tether's former auditor fined $1 million by the SEC for sloppy accounting. So this was in September of this year, 2022.
Jesus Christ.
So yeah, I mean, a bunch of red flags.
So that means like the SEC was looking into their books to try and find something, right? Like maybe like a...
Yeah, you know what's weird is that the former auditor... So this is an independent auditor, right? Tether's former auditor, or maybe they hired this auditor.
Maybe he was accounting something else and like he was... I don't know.
Yeah, this...
Nonetheless, the guy who's been fined $1 million for sloppy accounting,
So
it has some sort of association with Tether, right?
Yeah, accused for serial violations of federal securities laws.
Oh my God. Improper professional conduct. What was he doing, dude? Like jacking it like in the office or something?
Here's why this is a big deal, right?
Dude.
Here's why. Because if you look at CoinGecko, top 3 crypto.
Holy shit.
65 billion.
I didn't even know Tether was number 3. I thought there were like 6 or something like that.
No way, dude.
Holy shit.
So if this is like...
See, this one actually, like, I just felt my heart rate go up. Like, my blood pressure is rising. This one actually scares the fuck out of me.
Yeah, if this goes down, 65 billion goes down with it.
Yeah.
And not only that, I mean, every crypto goes down, right?
I mean, every crypto, every project, probably every DAO, everything that touches Web3 probably has some sort of exposure in their treasuries. Tether.
Yeah. Like Tether's just not something that, I don't know, just too risky. Like there's too many red flags.
Apparently not, dude. 65 billion, dude.
Because I go back to SBF and like FTX, and there's been plenty of people calling out like the red flags before everything went down.
But yeah, but Tether is one, like, this has been a concern for years.
Yeah.
You know, and so let's say they're being genuine. They're 82%, you know, liquid.
Yeah. Let's say that
is that a problem?
Publicly disclose that it is
like,
82.
guess what, guys? These guys are fucking honest lads all along.
Yeah.
You know, Tether's great. Gives a fucking thumbs up from the SEC.
Yeah.
Then what? Like, is that still? I mean, it's not the promise they're making that every Tether is a 1-for-1.
Yeah, but I don't think
backed.
you could do a bank run on 82% collateralized, because they could just sell whatever assets that they have and cover the other 18%.
Yeah.
I feel like that's more than doable.
Interesting.
The problem is when you can't recall, like you can't fulfill the orders.
Yeah. And I guess TJ asked a good prudent question here while we were talking about this off cam. He's like, dude, how does Tether, because I guess they paid fees or fines in the past or something, or millions, multi-million-dollar fines.
Yeah.
It's like, how does Tether make money to pay this stuff, right? If it's a stable asset that they're not really supposed to generate any profit from, right? So what's their business model here?
Yeah, how does Tether make money? It says Tether makes money from various fees by issuing loans to other institutions as well as through investments.
That doesn't
make any sense.
That sounds exactly like what FTX did with Alameda. And
because if I give you $1 and you give me a Tether, that dollar shouldn't be touched.
Yeah.
So by issuing loans to other institutions through how?
FTX issued loans to Alameda.
Yeah.
And then they've propped up their Alameda's investments with customers' funds. Like, how is this any different? This brings up way more.
It's a great question, I mean.
Thanks, dude. I thought of it myself.
Well, go up to the third tab, the 82% again.
82%.
So it says that it's 82% in extremely liquid assets, right?
Which is crypto.
Like, it is? I thought it was like a dollar is extremely liquid, right?
I guess I would say $1 would be.
So they could still have the other 18% in like not extremely liquid, right?
Yeah,
maybe that's their investments.
Yeah, I would think the other 18% would be like the risky shit.
So basically, they are a fractional reserve bank, meaning you put in $1, you'll keep 82% in the bank.
Yeah.
The other 18% is going to be used for investments.
Go down a little bit more. I think it has another number there. The 0.07.
0.07. So a form of short-term corporate debt with high risk profile has fallen to just 0.07 of its holdings. 0.07%, which is nothing.
Very minuscule, very minuscule.
It's not even a percentage. It's like not even a tenth of a percent.
Mm-hmm. The United States Treasury bills now account for over 58% of the stablecoin issuer's reserves. Okay, interesting.
Yeah.
I mean, this is okay.
So we got Paolo, the chief technology officer of Tether, claiming $60 million to its excess reserves.
Mm-hmm.
I mean, this feels like SBF being like, everything's cool, guys.
Yeah,
everything's all good.
Their attestation reports were conducted by BDO Italia, Come on.
An arm of the BDO Global Accounting Organization, which Tether hired in August to fulfill its reporting obligations.
Okay. I mean, yeah, this is one of those things. We kind of either just take their word for it or we get some sort of proof of reserve. That's been a trend since the FTX debacle. Like, everybody's kind of running with it. We're even starting to see Web3 organizations like Phantom come out with their own like financial revelations, like just to keep people at peace. And so, you know, there's no discrepancies.
Yeah.
You know, we're going to maintain operations. Phantom even came out and like disclosed all the offerings that came to them, like from exchanges. They didn't name any by name.
Like what kind of offerings? Like, what do you
like,
mean?
hey, you want to list on our exchange? Give us like, you know, $10 million. Like, they disclose like direct, like how the industry is operating, kind of shady in a sense. And like they said, you know, top NFT marketplace. You want your NFTs in our marketplace? $10 million. Stuff like this.
What?
Yeah, look it up. Maybe that's next week's podcast. We'll look into. They published a whole report on this stuff.
Huh.
In conjunction to their own financial backing. So I think it's a cool trend that's emerging. Maybe the whole space is kind of preparing for the inevitable like
disclosure.
It's disclosure era.
Yeah.
Where like everybody at some point will become a public organization, even these DAOs if they want to operate.
Yeah.
So let's get into the habits, right, of a public company.
Well, I wonder if that's man, is that really the path that makes the most sense? It's like disclosing everything. I mean, inherently crypto is public, right?
Yeah, but at the same time,
but it's not clear.
Yeah, like, you know, decentralized, I guess, organizations, they like to come out with the ideas of like the community kind of like, you know, owns and operates the treasuries and stuff like that. But there's this like shadow corporate entity on the back end that actually owns a significant portion of these ecosystems, and nobody knows what kind of financial assets they'd have,
right,
and what their burn rates are and stuff like that. So we don't know because the community owns these these treasures, but are they actually doing anything to like make sure the long-term sustainability of these ecosystems are all met?
Yeah.
It's those corporate entities on the back end that are actually fulfilling all of those obligations, right? So I think transparency is a good thing in that respect, right? Can these guys who have multi-billion-dollar ecosystems actually operate for a foreseeable amount of time?
Yeah.
You know what I mean?
Yeah. That's true. I mean, their burn rate is important, and how much cash reserves they have is important.
How risked or exposed they are to all these potentially systemic problems. That's important to know.
Man, but I feel like that disclosure and the response from the community is going to be completely subjective. It's like one of those exchanges showed that 20% of the reserves is like in Doge. Well,
I think it was Shiba.
Or
who was that? Oh, yeah, who was that?
I think it was.
Was it OKX or KuCoin? It might have been KuCoin.
Yeah.
I think it was KuCoin, dude.
20%. Crypto.com.
Oh shit, it was Crypto.com, dude. Okay, that's another one I'm expecting for sure to go down. Well, just the nature of.
Haven't they already gone down? Oh no, they haven't. It was their proof of reserves are being shuffled around.
They were one of the ones being caught like just swapping funds amongst each other, and then taking snapshots of like, dude, we're fucking liquid.
Can we just assume that anybody with a stadium is on the chopping block? Any
crypto entity on any like MMA fighters draws or like a boxer, anywhere near those guys.
R.I.P. V-Chain, dude.
Oh yeah, that's true. Definitely ETH Max is on that list.
Yeah, I mean, we get offers all the time to like take people's money to talk about their exchange or their crypto or whatever. It just feels disgusting.
Yeah, but that's marketing.
And it's like, and it's projects that we've never heard of too.
Yeah, I know. I remember seeing some of those, dude, during the golden days of the market when everybody was like scamming each other left and right, I guess.
Yeah, it's literally every day.
Like we were getting hit up daily for all these offers, right? Because we had our viewership was way up of course, everything was up, including our
portfolios,
everything. It was definitely euphoric, right? Isn't it interesting? Like looking back, it's definitely didn't feel that euphoric. It felt kind of.
It felt like okay, cool.
Yeah, this is how things are supposed to be.
This is normal.
Yeah. And now we're in like a whole different world. It's like holy shit! I can't even imagine.
Yeah.
Going back to that, like sentiment wise and stuff. But anyways, yeah, dude, it's incredible the amount of money was floating around, and all we had to do is like say a couple nice things about him, and money was.
See, I guess that's the nasty thing is that when you take in money, you can't say anything bad.
Yeah, I mean you were getting paid to chill. Yeah. I mean this happens across not just in crypto, like all of the planet.
It does. You're right.
Yeah,
it's just
it does feel nasty.
I don't know how people do it. I just don't. I don't know.
Well,
there's got to be a better way to do this.
To monetize?
To monetize like a YouTube channel. There's got to be, dude. And maybe it's like you're just chilling mattresses or, water bottles or something. I don't know.
Something that can't like.
Yeah, you can't rug pull. Yeah.
Unless like people found out the mattresses are made of like
dead people.
Asbestos. It's like, fuck, we gave all of Rio's cancer, dude.
Yeah.
Shit like that. That's the only way.
Yeah, I guess. Yeah, I guess
even that requires due diligence. Yeah, just make sure the products you're shilling aren't like full of lead.
Yeah, and there's so many people who don't do any due diligence.
Oh, none. I'm talking none.
Yeah, like FTX, they were giving YouTubers like $50,000 a month,
including BitBoy. BitBoy got paid like $1 million or something like that from FTX, and now he's out there in the Bahamas, like. Chasing down SBF as if he wasn't like getting,
Well, you know the amount of research that went into Floyd Mayweather looking into Ethereum Max, dude.
Yeah,
you know what it was, and it was zero.
It was literally like probably like an AP watch, like and like a briefcase filled with like maybe $1 million or $2 million.
Yeah. But you know what? I feel like Floyd Mayweather, he's not vetting all the deals that are coming in. It's his team. It's like his team comes to him and say, Floyd, all you got to do is say these words. Here's your line. Just say it. Look in the camera. Just say it, and then you're done for today.
So that's what happened to Brady too. Then
I feel like
it's like, dude, you just got to do a few commercials a year.
Yeah,
drive around in like an FTX Lambo once in a while.
Yeah,
something like that. I don't know.
Dude, the commercials were good too. They're good commercials.
Well, yeah, dude, and all that money.
Yeah,
I'm talking billions.
Yeah,
they're not bad, and they're convincing, man. Yeah, it makes you feel like, dude, this is something you could trust. If you produce a commercial like this.
Yeah, I have a hard time believing that, Floyd Mayweather's looking at his tablet or Tom Brady's like reading up on FTX and
I don't even think Floyd Mayweather can read. So he's definitely not doing that.
Yeah, like I said, I'm saying there's no way they're like have conviction in any of this stuff. So
yeah,
I can't really blame them for thinking, for taking their money, but I mean, their business, they got people to support.
Yeah, and then they were newly exposed, I guess, during this most recent cycle, to the whole idea of NFTs and crypto, and everybody was loving this stuff. So, I mean, it's easy to convince somebody, like, dude, get in on this.
Well, that answers your question. Well, you said you don't know how people can do it, and that's how they do it.
Well, I guess you got to get so big where other people make decisions for you, and then you get fucked.
You get fucked?
Yeah.
Yeah, I guess that's the takeaway, dude. You're gonna get fucked no matter what, dude. There's just so much fucking out there. But I don't know. So the SEC's coming, dude. That's one.
Oh, I guess what we didn't talk about is like what the United States is going to do as far as like not getting left behind. We didn't get too deep into that. We did talk about it, but we didn't get too deep into it.
What do you mean?
Because in my opinion, I think the United States is not dumb, and I think they're going to figure out a way to maintain a crypto power.
They're definitely not dumb. I'll give you that. Maintain a crypto power?
Yeah, maintain some crypto relevance. I mean,
well,
I don't think the United States is like, set in their ways to where they're just not going to participate in crypto.
Well, the way I understand the United States and having observed this country for most of my life, we're a very reactionary type government body, right? We don't preemptively do anything.
Yeah.
There's so many looming problems and threats on the horizon. It's from a planetary perspective, the United States government does very little to kind of like counteract.
Yeah.
Usually, like these things hit the fan, then the government reacts with some sort of policy agenda.
Yeah.
Right. So this is a similar thing. There's a lot of things looming on the horizon. A financial transition phase, a whole new paradigm.
Yeah.
And there's other countries out there much more readily adopting and like falling in line.
Sure.
So once that happens, then it becomes a competition. And then the United States will react. And guess what? They have the power and the position to kind of like cuck everybody else like as quick as possible because we're the U.S. That's what we do. We cuck the world.
So what you're saying is once they realize that, let's say for now,
Yeah.
Bitcoin is extremely valuable because
China's scooping it up.
Yeah, right.
Russia's scooping it up.
Yeah, they're like, oh shit, let me just buy up as much as I possibly can, the United States.
Yeah.
And they're gonna try to hold as much power in terms of how much Bitcoin each country is holding.
That's the only way to do it. And that's the only like bull scenario to get Bitcoin into that multi-million-dollar, projection.
Yeah, man.
10, 15, 20 years down the line.
If there's like a buying race, a buying battle between the countries on Bitcoin, it's going to be hard to sell your own Bitcoin even for $1 million just because it's perceptively more valuable than the $1 million that you would get.
Why would you? Yeah, you don't do that. You hold your hard assets,
Yeah.
unless like a rainy day comes.
Yeah.
And you got to liquidate. But Bitcoin already is incredibly, and it'll be even more illiquid at that point, I guess.
Yeah.
So you don't sell your Bitcoin, you're right. And that's going to push it even more, that bull case scenario where we're talking $1 million Bitcoin, right? Like nobody's selling their bits. Just like people very infrequently sell their land on this planet. People buy land and pass it down from generation to generation,
That's true. I mean, because
you just don't sell it. You could take loans and you can collateralize it. There's a whole financial system to where you could still leverage these hard assets, right? So Bitcoin will become one of those at some point. But yeah, well, we'll wait and see.
Yeah.
Right now, it's not looking too good. 16K, dude. Shit.
Yeah, if you're the United States, now's the time to buy, right?
That's the crazy thing. Why aren't they buying yet, dude? Well, like I said, we're waiting for the reaction.
The reaction, and regulation to some extent. All right, guys, that's been the podcast. Let us know if you disagree or agree with anything that we said today in the YouTube channel below. And make sure you subscribe. We're getting closer to the 10K. You follow us on Twitter at The Block Runner, at MetaZone.io, and at RoviAI. And we will catch you in the next podcast.
Peace.